Right, this is the AIQ Trading Expert Pro Big Picture Market Review for July 2010. First of all, we're going to take a look at the Dow Jones Industrial Average Index, and we can see we've had quite a couple of sell-off days, and this little arrow down here tells us that that particular day we had a confirmed sell signal in the market. So a little bit late though, but still it is a sell signal, so it's something to be aware of, that the market is overall very weak right now. We've had a buy signal, expert rating up 97 soon after that, but for that to be valid it needs to be confirmed by the phase indicator. So the phase indicator needs to go up in the direction of the signal. So you can see the phase indicator in this case have gone down. So the confirmed up signal from the day before is actually still very valid, and the following two confirmed buy signals are not confirmed because the phase indicator is going in the opposite direction. So right now the market's very, very weak. If we look at it on a weekly chart, we can see the market's forming a bit of a base here, drifting lower, and this is what we're going to have some form of problems here at some point, because we're going into a seasonal weak period. So I think it's going to be very difficult to trade the market between now and October, so people are best off going on holiday, or you could remain short until it drives, until the market makes a new low and support comes back into the market. If we go and look at the Nasdaq Composite, for example, we can see a very similar situation. Click on the expert rating bottom left button to see where the sell signal was. We can see a very nice sell signal there, and it's going to check if it's been a confirmed one. We can see yes, that sell signal was confirmed the following day, and the market headed down. So that was a good trade to do. There was a good 200 points in that, and that would have yielded quite a good return. So overall, market's very weak right now. We've actually not had another buy signal on the Nasdaq, for example, so be aware that the market might drift down to sideways for the remaining part of the year, October. If we then go and look at the market log report, for that you go to your report section and you click on summary reports, market log report here on the left, and click on the date, and we can see we have a overall very negative picture. We've got unconfirmed buy signals on 91% of the stocks basically, so there's a huge universe of stocks that actually given unconfirmed buy signals, so we wait for that to actually confirm. But we've had two expert ratings up over the last couple of days, but they weren't really confirmed. So the market is looking to go back up at some point, but it's not entirely sure when, so be very cautious. If we look at the market log sector rotation report, we can see overall all the major sectors of the S&P 500 are currently very negative, apart from servicing, pharmaceutical, biotech and houseware. Very bearish overall in the market. Capital goods very bearish, food and drug, you can measure that by the length of these little arrows. Materials very negative, media is very negative, semiconductor all very negative. You look at the trend score and you can see the higher in terms of the negative number, the worse it gets. So we really do have a very difficult market right now. On a sector analysis basis, we can see the only sectors that's really got a fairly strong uptrend is telecoms, technology, food, pharmaceuticals, and we can see banking, automobile components, consumer services, retailing, media, real estate, all sectors that's got very negative trends in them. If we now go and drill down in terms of the weekly group reports, we can see that gold's got a very strong uptrend, but be wary of that because the gold side, we're fairly late in the cycle with gold. So you can see the gold sector has gone up quite a lot, and it's now struggling to move higher. So it's broken out of a cup and handle here, and it's going to be interesting to see if that's going to remain the case. Wireless telecoms, if we go and check that sector, you can see that's starting to trend up, so people are looking at the wireless sector probably from a dividend yield perspective, because a lot of the telcos pay high dividends instead of actual capital returns. So a lot of my money is now being flowing into that sector, so you might go and cherry pick that sector for some opportunities. If we go down the list, we see we are the most negative sectors. We can see healthcare facilities, education services, home building, that's remaining fairly negative. You can see home building has now just collapsed recently, a couple of down days. We're below the moving averages, so steer quite clear from that sector. There's just no reason to be buying something that's stuck in a downtrend like that. So overall, we can see very negative picture by a lot of sectors. There's a few nuggets here where we have high trend scores, the TS ratings fairly high, and we have a couple of upside sectors with strong uptrends. Okay. If we want to go and look at the persistence of money flow, is a good scan to look for, because that'll tell you which stocks are in basis, because your strategy now is to look for stocks that are in basis. We can see here is a couple of stocks with high trend scores, and we can also see that this percentage level tells us that this persistence of money flow, these stocks are all trading in the upper end of a range, and they have consistent money that's flowing into them. You might want to sort this group by price and start with the highest priced stocks first. Don't try and bottom fish low price stocks. The problem here, if you have a lot of low price stocks here, it also tells you the quality of the market's not particularly good. Let's take a look at Advent Software, ADVS. We can see their nice steady uptrend. It's just had a base formation, it broke out of the base, it's now dropped back into the base, and we will see if the momentum is going to continue. If we go to a daily one, you can see clearly almost like an inverted head and shoulders or a double bottom, huge breakout, now the retest. So keep this one on your watch list. It's definitely one to look out for. If we scroll down, we can see a few more. WMware, also a nice stock, steady uptrend. You can see the aggressive pullbacks to the 50-day moving average. In this case we have a 50-day, so the 50-day is a particular area where you could look at buying the stock. So if the price puts its head right above that 50-day moving average, that would be a nice entry point. As you can see, on a weekly basis, the ideal place to buy the stock would be the pullbacks to the 50-day moving average as the ideal entry points. So that's your strategy. Now you either look for stocks that are in basis, or stocks that are forming basis, or stocks that are pulling back to the 50-day moving average. But watch out for the big picture, the market log report. So when that starts to turn bullish, then you might want to look at buying those stocks. But in the meantime, just keep scanning them, look for stocks in basis, and just be wary that we are in a very difficult market. We're going into a seasonal weak period, so just be cautious. There's no time to be rushing into new buys. Until next week, until next time, thank you very much.